Hello and welcome back to brainZone, the channel of awesome facts where you can learn something new every day. You don't have to be Selena Gomez to make some serious money on TikTok. In fact, you don't even have to be Charli D'Amelio, the most followed TikToker on the app. Regular people are making money on TikTok all the time, without celebrity status and fame or wealth. But how? Today, we will discuss some helpful money advice found on TikTok. School might have given us great opportunities to learn a wide array of subjects, but for many people, finance was not that serious a topic at the time. And in true TikTok fashion, users have been creating videos that seek to fill in some of those holes. Some of the money advice I found on TikTok is actually pretty solid. We are always bringing you interesting and informative videos, so don't forget to subscribe to the channel for more up-to-date content. Just one click on the bell icon and stay with us. Now, let's begin with the 11 helpful money advice I found on TikTok. Number 1. This video is from @TheMoneyMovement, giving a crash course on what the heck a mortgage is. The user clarifies that when you need to buy a house yet can't manage the cost of the absolute expense, you pay what you can towards the house, otherwise known as an upfront installment. At that point, you request the bank to provide the rest from the cash, the credit sum. Afterward, you pay that amount back to the bank. Once it's repaid in full, congrats, you now own the house. It's presumably a smart idea to have even the faintest understanding of how a mortgage works, considering most people end up paying one for at least 15 years. Just saying. Number 2. This video is from @VanessaArgon Retailer that walks you through how much you really need to save to buy a property. It's actually more than you think. The TikTok separates the math for buying a house that costs $450,000. They note that some upfront installments can be just about as low as 3% gratitude to some advanced projects. Yet, in this model, they make computations dependent on a 3.5% initial investment, which generally compares to $16,000. But wait, they also explain you'll need to save up for closing costs, which can be around 2 to 3% of the loan payment. Actually, loan payment equal to the cost of home, subtracting down payment or initial installment. So 3% of a loan payment of $434,000 means closing costs will run you another $13,000. Now, all that's left to do is to add the price of a home inspection, which is usually $400 to $600. This all adds up to a total of saving $290,600 to buy a $450,000 home. It's also important to note that the user adds a disclaimer noting that it'd be wise to save up a little extra for any emergencies that may pop up, like if anything breaks or needs replacing as soon as possible. And while putting down 3% might be enough to get you a mortgage, saving more can help you avoid private mortgage insurance and lower your monthly payments. Number 3. This video from @KianaDaniel perfectly sums up what an emergency fund is and why you should probably start building one ASAP. The TikTok clarifies an emergency fund should cover 6 to 8 months of your fundamental costs. Think the measure of cash you spend on food, lease, contract drive, and so forth, saved in an account or asset that can easily be withdrawn from for cash. An emergency fund can provide a financial cushion if you lose your income. When you're just starting out, a good goal could be to save up to $1,000. From there, you can gradually work your way up to a loftier savings balance. Number 4. This video from @Caltalip breaks down the difference between a credit card and a debit card. They sum up that utilizing a debit card resembles acquiring cash from your bank to make a buy. You'll need to take care of that acquired cash. In any case, utilizing a credit card implies that you can just go through the cash you as of now have in your financial records. They likewise note that utilizing a credit card can help assemble great credit, but you also need to use it responsibly. Number 5. This video from @PaydayPursuit is on some practical ways through which young adults can get started on their financial journey. This TikTok video outlines 3 key steps to make. Number 1. Open up a credit card and always pay the balance in full each month. Number 2. Open up a Roth IRA account for retirement and contribute even a little each month. And number 3, invest in yourself. It proceeds to clarify that opening up a credit card is important because of how much your credit score is determined by your length of credit history. Just make sure you maintain good spending habits. They also touch on the idea that you can start saving for retirement with just a part-time job and set yourself up to eventually retire as a millionaire. Lastly, they suggest that when you're young, you have a great opportunity to invest in yourself by gaining knowledge through, for example, books, since you don't have many financial obligations. Number 6. This video from Project Aeronaut introduces the positively revolutionary idea that 22-year-olds don't need to drive the newest, fanciest car and save money. As per this band of companions, purchasing a new car straight out of school is one of the most exceedingly terrible ventures you could make, since its worth deteriorates when you drive it. Their solution recommended in this video is to buy a used car. You'll save a ton of money that way. Alright guys, hope you're enjoying watching the video. Don't forget to subscribe to the channel brainZone and click the bell icon to be notified every time we upload a video. Number 7. This video from @FemFinancial explains this thing called a high-yield savings account and how it could give you a better return on your money. The user clarifies that numerous customary banks pay you exacting pennies for reserving your money in their records. But high-yield online savings accounts can give clients a higher return. Marcus by Goldman Sachs and Ali Bank, for example, provide an annual percentage yield of 0.5% compared to the 0.01% from some other banks. This means you may earn money in interest just by keeping your money in these accounts. Online banks are commonly ready to offer a higher yield contrasted with conventional banks, since they don't have the overhead costs that plenty of brick-and-mortar banks have. Hence, they're ready to give their customers a little something only for banking there. Number 8. This video from @BudgetBros Podcast comes with a clever yet digestible way to save a little money every day. Yes! It's cool. Let's see its method. Look at your checking account balance at the end of the day. Take the last digit and move an equivalent amount into your savings account. Repeat this process every day for a week. After 1 week, you've saved $24. But the real magic happens after doing this every week for a whole year. You'll have saved approximately $1,248. This is really a piece of good advice to save money given by @BudgetBros Podcast. Number 9. This video from @SpencerBarbosa describes some smart hacks for you to save money as a student. If you are a student, then you should follow this advice. The user points out that spending money on food and drinks can really add up, and provides a simple yet clever tip for when your friends want to order pricey drinks. Just order water instead, since it's usually free everywhere. Oh, and ask about student discounts wherever you go. Their other tips include buying makeup from TJ Maxx and Winners, a Canadian fashion brand, opening a tax-free savings account, and simply prioritizing your needs. You just need to limitize your expenses if you really want to save money. Number 10. This video from Spencer Hawkhuss shows rather than tells the value of sweet compound interest. They pose the question, would you rather have $1 million today or a penny doubled every day for 30 days? The instant $1,000,000 might sound appealing, but as they point out, the penny option can make you more money thanks to the power of compound interest. They explain that compound interest is equal to where your money grows exponentially and earns you interest on top of your interest. And in case you're curious, they also point out that if you doubled your pennies every day for 30 days, you'd end up with over $5 million to be exact. Number 11. This video from @SedonaFrancis covers a few ways to get a head start on your financial future while you're still in college. This TikToker points out 5 main pieces of advice given to college students. Number 1. Get a credit card to help you build credit. Number 2. Start a high-yield savings account. Number 3. Create a Roth IRA and contribute at least $20 a month to start. Number 4. Perfect your elevator pitch. And Number 5. Learn how to budget. The user recommends cards like the Discover Student or Capital One student cards and high-yield savings accounts such as Ali or Marcus by Goldman Sachs. But as with any financial decisions, it's important to do your own research on accounts to figure out what suits you to save money. So, these were the 11 helpful money advice I found on TikTok. Make sure to leave a like and subscribe so you can join the brainZone squad and be a part of the channel. Thanks for watching the video.